Alright guys, welcome back to part 6 of my In the Money covered called Bootcamp. In today's video, I'm going to talk about net profit, break even, and your max win, which is also your net profit. So this video is going to be pretty short because all you have to use is the intrinsic, the extrinsic, and the contract price, which I gave you all those details in the last video. I'm just going to show you how to apply them. Okay, so I sold the $64 call earlier. We're just going to use this as our example. We'll just pretend like we just opened this position and we just got $274 of credit. Alright, so the way that you find your net profit on the trade is simply by finding your time value. So we calculate our extrinsic value through our intrinsic value and contract price, and then we get that $49 of net profit on the week. And that inevitably becomes your max profit on the week, so you will never make more than $49. And then to calculate break even, you can either subtract your net profit from your strike price, or you can subtract your contract price from your entry price. So 66.25 minus 2.74, that would give you break even. So anything below 63.51, every single cent that the stock drops, you lose $1 on your position. And then you get to keep that full $274 of cash, and then you can invest and do whatever you want with it. So even if you lose, you generate cash flow, and then if you win, you get that net profit. And then there's certain scenarios, like say you expired exactly at $64, you would keep your full net profit, and then you'd also keep that maximum cash flow. And as you go upwards, you start losing cash flow, but you start making net profit. And as you go down, you start making cash flow, but you start losing net profit. So whenever you're in a downtrend and cash flow is the most important, that's when you'll be making your most amount of cash on the week. And whenever the stock's just grinding upwards, that's when you'll just be happy making your nice net profits. So for example, if we're at $68 when we roll, time value is completely worthless, the contract will be worth $400. So we lose $130 of cash flow, but we make our full net profit on the week. And then vice versa, if we closed at like 63, for example, we'd lose $51, but we'd generate $274 of cash flow, and then we could invest that into the dip. So you keep this nice cycle going of generating cash when you need it in downtrends, and then generating profits when the market's in a nice sideways or upwards move. And also, if a heavy downtrend comes, you'll want to focus on going deeper in the money rather than making net profit, and then just focus on staying alive and generating cash flow to buy the dip. Alright, in the next video, I'm going to tell you how I select my strike prices. If you want to learn more, don't forget to drop a like and subscribe, and then join the free Discord in the pinned comment as well as the description.